Well, hello, everybody. Today I'm excited to be here with an author I chased down while I was making Money Disrupted. About halfway through the development process, I came across the book, The Big Print, which was written by a gentleman named Lawrence Lepard. And I'm excited to have him here today. So, hey, Lawrence, how's it going?
Great, Chris. Really nice to be with you, and was honored to be a part of your excellent documentary.
I appreciate that. Yeah. When I read your book, I realized, holy shit, this is the thesis of the documentary. It's like word pound for pound. This is everything. And what I kind of think of the big print as is a more digestible Creature of Jekyll Island. The Creature of Jekyll Island is a great book, but
Yeah.
where Mr. Griffin stops is he doesn't quite get us into the 21st century, right? He doesn't bring us into blockchain. And
Well,
I
and he goes much more. He's much more scholarly and much more in depth, and that's a great book, but it's a big long read. I tried to, and also the Bitcoin Standard by Safe and Lynn Alden's book Broken Money and some other books. I mean, I try to kind of write an everyman's view of what the problem is, because I know that most people don't read thick textbooks. So
Yeah, I'm glad that Mr. Griffin had a summary at the end of every chapter because otherwise it was like pretty long. You didn't really
yeah,
remember what you read by the time you got to the
it's
end.
it's a great work. I mean, he really opened the door up for this whole area, and led
Yeah,
so many of us down the path to understanding what happened. So, Ron
yeah,
Paul cites him, and well, Ron's in the documentary. So,
yeah.
yeah.
Ron is in the documentary. Creature of Jekyll Island was in fact on Ron's. It was on his bookshelf, so he
Oh,
definitely
is
had.
it? Yeah,
He's
yeah,
right. He's like, didn't I write a forward for one of those editions? I was like, I don't know if you did or not. You can't, but yeah. So since I interviewed you, middle of last year, towards the end of last year, as we were collecting interviews for the documentary. So in that time, there's been some wild events. We're kind of at war again, and the country is once again printing, as it always has. But
yeah.
what's your viewpoint? We've seen huge swings in precious metals. Like we saw a huge swing in January. We were going up
Yeah.
to like 120 silver and 5,000 gold. And then Bitcoin, I don't remember when the last all-time 124 was, but it's pretty recent, like
It was
last year.
October. Yeah, it was
Yeah.
October last year. Yeah.
Yeah.
So, I mean, everything we talked about, everything you talk about in the documentary, everything I talked about in the book is kind of playing out. And the difficulty of it is it's a little bit chaotic. But, I mean, big touch points, I guess the two big macro touch points since we last spoke were that the Fed stopped its quantitative tightening, and in fact reverted to quantitative easing. Now,
Mhm.
they don't call it that, they call it reserve management, which is really just a euphemism for printing money. And they're now printing $40 billion a month. And Lynn Alden has called it the gradual print. And she's right. That's 480 a year. It's not the trillions that they printed at COVID or in the GFC. But so that all happened in December. And so we're back into printing money because the system is too tight. Of course, then, as we all know, the more recent event is the launching of the war on February 28th. And the realization that wars are, I mean, the book talks a lot about how wars are one of the main reasons why fiat is such an essential part of the way our system works, because people, they can use printed money to pay for these wars. I mean, if they went to every taxpayer and said, "Hey, we're going to have a war, and by the way, you got to send us a check for X thousand dollars," taxpayers say, "No, we don't want to do that." But instead, what they do is they run a war. They don't have the money for it. They print the money supply to pay for it, and then of course we all pay more for groceries and gas. And so, the war, they just asked for a $200 billion supplemental. And I've seen estimates that if we were to continue running at the rate we're running at, and we may or may not, it would add another 600 or 700 billion to the deficit. And the deficit has gotten any better this year. Last year we were 1.8. This year we're a trillion, 1.8 trillion. That's the year ended September. This year, for the first 5 months, we're at 1 trillion. So we're not even halfway through the year, and we're at 1 trillion. So it looks like we're running at over a $2 trillion run rate. Add a war onto that, et cetera. And so things are getting kind of dicey, and you're seeing it in a lot of areas. You're seeing it particularly in the bond market. Ever since the war started, the 10-year yield has just gone straight up. And in fact, I would even submit that perhaps some of why Besant and Trump are talking about backing off on the war and kind of negotiated solution is because they recognize that continuing it's going to be very difficult to finance. So, but that's kind of a different matter, and we'll have to see where they go with that. But yeah, it's everything, from what I can see, Chris, everything is leading to a big print as the book projected. And the timing, I don't really know. A lot of people ask me what's the timing. Nobody knows. I mean, it kind of depends on when the markets can't stand it anymore. It's like trying to predict, which snowflake is going to make the avalanche go down the mountain. The cornice is built up, the snow is there, the debt's there. We got to pay it back. We can't pay it back. We can't pay it back without creating more money to pay it back with. And so at some point we're going to tip over and be back in a situation that looks kind of like the GFC. Excuse me for a second, or like March of 2020, where basically everything blew up and they had to step in and print money to keep the system going. And I'm pretty sure they'll do that again, because the alternative is much more unpleasant. And of course, the implications of stepping in to keep the system going are that we get inflation. And in the last one it was 40%, and sadly, it took us to 9%. I think this one takes us into the teens, and we have just another big burst of inflation. But what's going to be the causal event that makes it tip over? I just don't know. But it feels to me like I don't think we're going to make another year and a half. It feels to me like we're in the kind of the months category. And another thing I should mention that everyone's probably aware of, but it's, I think, an important touch point, is that Jerome Powell, who has been kind of the chief, person who's tried to control the money supply, raised rates, etc., is leaving office in May, and Kevin Warsh is being brought in to replace him. And everyone says Warsh is a hawk, and he probably kind of is. But my guess is they wouldn't have selected him if they hadn't cut a deal with him. And so it's going to probably be something different than what they've done in the past. I mean, the history is they create new things. When Silicon Valley Bank failed, they created a bank lending program. When we had this recent tightness this year, they created reserve management. I mean, and I think what it probably looked like is something along the lines of, they're going to give the banks some kind of a special deal where they can borrow money at a very cheap rate if they agree to take that money and use it to buy the treasury bills. And so it'll be QE, but at the bank level, not at the Federal Reserve level. But it'll accomplish the same goal, which is keeping interest rates down and keeping the markets functioning. So that's kind of a long-winded catch up from where you and I last spoke, I guess, 5-6 months ago.
Right. So when you look at obviously the association of M2 money supply, the total amount of money that's circulating, has a general correlation with the overall performance of gold and Bitcoin, because as you print more money, then, stores of value go up. There's a correlation there. What has happened? What's your view on why have we seen like historic retreats on especially the precious metal side, right? If you look at the long-term precious metals, like long-term, we've never seen that kind of volatility. Bitcoin, we had kind of expected because there's cyclical nature to it, but gold's supposed to be this, store of value, and then it went crazy.
To me, it's just what's happened to the gold price. We all know kind of last year it shot up to low 5,000, 5,400 or so, and now it's in the 4,000s. I mean, it just got ahead of itself, Chris. And this is, I think what happened that's really meaningful, I think gold started last year in the 3,000 area and it ended the year in the 5,000 plus area. That's really an extraordinary year for gold. I mean, gold typically on a really good year would go up 20%, and it went up, more like 50 or 60%. And so, in my view, what happened is it's signaling what's coming, the print, but it got probably a little bit out over its skis, and it just had to retreat. There was a lot of exuberance in December, January, at those highs. Everybody and their brother thought it was going to 10,000 tomorrow. And I actually do believe it's going to 10,000, but over the course of a few more years. And so, and interestingly, the alternative, Bitcoin, which was 124,000 in October, took it on the chin and went down into the 60s and 70s. And they both are sound money. They're different stages of their life cycle. Bitcoin's emerging. Gold's been here forever. I think when everyone realized debasement was coming at the sovereign level and a lot of institutional levels, they're not ready for Bitcoin yet. Bitcoin's still really a niche market. And so they said to themselves, okay, they're going to print. We know inflation's coming. Let's go to the traditional hedge. Let's buy gold. And that's why gold did so well. And then, of course, what happened is people started thinking, well, gosh, if gold's well, why isn't Bitcoin doing well? And so there was probably some swapping out of Bitcoin into gold. And also, Bitcoin tends to be a little bit of a liquidity widget. It tends to, it had a speculative component to it. It was trading a little bit like the Nasdaq. It's a little bit risk on, and I would argue that we've been changing. This past year has seen us moving into more of a quote unquote risk off world. I think that, and I think almost like the markets could smell what was coming in terms of the war. The liquidity has been drying up, and that affected Bitcoin, and Bitcoin went down in gold terms quite a bit to a very low level. I think if you look at the two right now and you say to yourself, I want to buy some sound money, which is the better buy? And Bitcoin is clearly the better buy. It's cheaper on a relative basis. It's within a channel. It's at the bottom of the channel compared to the price of gold. But people say, well, then should I get rid of my gold? I say no. I'm just saying that one's cheaper than the other. I think a year from now, 5 years from now, 10 years from now, both of these things are going to be much higher in price, and that just goes back to the underlying, Lynn's theme. Nothing stops this train. The federal government's spending is out of control. They haven't made any efforts to contain it. In fact, with the war, it's now going in the other direction, and so as a result of that, we're going to just see more and more monetary debasement, higher inflation, and the dollar will continue to lose purchasing power. I mean, one of the things about this war that's really true, is, part of the dollar's value was kind of its petrodollar-like status, and the fact that a lot of the Gulf states were depending upon us for their security, and they believed in the dollar, they believed in the U.S. military. Well, that's not working out the way they planned, and there are a lot of people who are now saying, well, okay, we're not just going to buy oil in dollars, and Iran just talked about selling oil to Japan in Chinese yuan, and so in my view, that what's going on, part of what's going on here in a big longer term view is, and this is very much like, the Suez moment for the Brits. I mean, the dollar is really kind of losing its reserve status. That's been happening for a while, but something like this war really accelerates it. And so, to me, it's kind of a confluence of events that tell you, you really have to be in sound money. And it's difficult because, who wants to buy Bitcoin? I know there are people who are buying it at 120 and they're like, it's gone to 70. They're like, did I make a mistake? I'm like, no, it's, think of this the way you think of food. Filet mignon's on sale, you go buy it. You know what it is. You buy it because it's cheaper. You don't hope filet is going to be 126,000. If you can buy it for 70, it's great. And so, to me, the markets are just kind of giving the latecomers a little bit of an opportunity. People who feel like they missed the Bitcoin train, they can now get on it cheap, or even people who feel like they missed the gold train. It's dipped down. Now gold could go a little bit lower than where it is right now. I don't think it will, but it could, and they both could. But I invest and I manage money on a 5-year, multi-year time frame. So my objective is not to make money in any 3-month period, and I can be wrong in the short run, but I'm quite sure that I have a high level of confidence that I'll be right in the longer run. Unless something changes and we suddenly get more responsible, if the Federal Reserve and the federal government get more responsible. So,
right, yeah. On a 5-year basis, Bitcoin's up 30%, and so even in our lows right now, we're still 30% over where we were 5 years ago.
Which is not great, by the way. that's pretty bad, but it's trending higher. They both are going up and to the right, and if you take it more than a 5-year basis, you definitely get. Excuse me, I'm trying to turn off my phone.
Oh yeah, yeah, of course. We all know the price history on Bitcoin, and we know the price history on monetary policy in terms of printing more money, and there's no way out of it. I've heard many theories about how Trump wants a weak dollar. It's a possibility that he actually wants the inflate. I don't know any. I don't have any inside information about that, but a couple people had talked about the revaluation account where the gold is stored in the treasury. So is there a net advantage, strategically speaking? I kind of look at it. What's the game theory here? Like, are we trying to secure resources like with Venezuela and Iran? Are we trying to secure oil and then reback the dollar and inflate it so that the stuff that's in the treasury is more valuable?
I think there's some of that. We're clearly trying to gain access to resources. They did that with Venezuela, and I think there's an element of that in keeping the Strait of Hormuz open to keep energy cheap. And cheap energy has been a pillar of Trump's policies of trying to grow the economy. And I think they won't say it, but I do think they know that they need a cheaper dollar. And the reason they need a cheaper dollar is that that's the only way to solve the debt bubble. That without inflation, you can't get out of this trap that you're in. Now, the inflation is kind of the dishonest way to get out of the trap, and it's what governments have used, for years and years in the past. Earlier, you mentioned the reval account, and that's a very interesting thought. I mean, in fact, the book talks about this, how, so the money is broken and the money is being devalued, and people are suffering from inflation. And there's a speech in the book that says what the president should do, and I think what we should do is return to a sound monetary system. We should have, the dollar should be backed by gold or Bitcoin or some combination of the two. Doing a one-time reval would be very painful and inflationary and expensive, and that's the bad news. It'd be like, taking your medicine. But then on the other side of it, you'd have a sound economy without inflation and without all the debt that we now have, weighing us down. So, and to do that, you would have to have a much higher gold price. I mean, the U.S. has 251 million ounces of gold, and so for every $4,000 that you raise the gold price, you get $1 trillion in the TGA if they revalued it. It's being carried at like $42.
Right.
So there've been talk about that maybe Bissent and Trump will do that, and Bissent has said things like, "I want to be president at the next Bretton Woods," and so it's arguable that they understand that and they're thinking about doing that. The issue is you couldn't just do it, $1 trillion these days with 39 trillion of debt. That doesn't really solve the problem. I mean, if you're
Right.
going to revalue the gold account in order to try and use some of the proceeds to pay down the debt, you kind of got to go to 10,000 or 20,000 or 30,000 or 40,000.
Right.
I mean,
Yep.
those are kind of shocking numbers when gold's at 4.
Yeah.
So,
Yeah.
and doing so, by the way, would be a real big one-time inflationary hit. And everybody who had dollar-denominated debt would really be crushed. I mean, and that's really the story. I mean, the sucker at the table here, at this card table, are the people who are buying long-term bonds, because they're just, yeah, okay, fine. The government can always print the money to pay you back, but what will it buy? And people say, well, this is really bad. All this inflation we had after COVID, it's terrible, and it is. I mean, hamburger used to be a couple dollars a pound, now it's $9, et cetera, et cetera. Well, wait until it's 90. And I'm not, I don't want to be panicking. I'm not trying to suggest it's going there instantly, but I'm telling you, if we continue printing money, it's going higher. The cost of gas, $3 gas will seem cheap. It will be at 9, and $9 hamburger will seem cheap. We might be at 20, and so, and only because the hamburger hasn't changed. It's just the dollars chasing it have to grow to service the debt. So.
Absolutely. Yeah. I mean, that's clear in everyone's lifetime. Anybody who's been alive more than 25 years, they have memories of, oh, the quarter pounder used to be this, or gas was 125 when I was in, or 99 cents, or 25 cents.
I pumped gas in high school for 23 cents,
Yeah, exactly. And now, especially those of us in California, we feel that extra craziness.
Yeah, you guys have a bad regime. We got a lot of taxes out there. I'm curious, actually, what are you seeing at the pump these days?
Right now, we're floating in the high 6s, depending on where you are. But it's changing week by week. It's gone up $1 in the last week and a half. If you go to Beverly Hills, there's a famous gas station there that during COVID went to $8, a gallon. I live in the valley, so it's actually $1 cheaper on this side of the mountains than it is on the other side. But yeah, it doesn't help that this state has an anti-energy policy, and they shut down the largest. Shut down the largest refinery on the West Coast. Oh, we don't need refineries. Well, where are we going to get that energy from then? We need that. So one of the metaphors that stood out in your book was the story of how there's generational trauma. And that's one thing I tried to, with your father's store and your grandfather's store and this sort of generational thing. So I don't know if you've ever seen this clip, but I'm going to play a clip of my retelling of that story. When I read the book, sometimes things stand out to me as a director. I'm like, oh, that's a great story. I should create that into a visual.
Yeah. I don't think I've seen the clip, so please show it.
Yeah, so here's a little section of Lawrence talking about, this is kind of in the first third of the documentary, we're talking about the Great Depression and some of his own personal stories about how it affected his family over the generations.
We had an enormous boom during the 20s, and then we had an enormous bust with the Depression following the 20s. All due to the Fed, all of it. My grandfather was actually directly impacted by that. He was running a business in Michigan at the time, and he had just, the 20s sent the wrong signals to him. He thought, oh my God, there's all this demand for what I'm doing. I need to grow my business. He took out some debt, he grew his business, Sure enough, 29 happened. We were in a depression. He had to fire all the employees, cut back the size of the business. And he and my grandmother spent most of the 1930s begging the bank not to foreclose. So he was very directly impacted by this. I know it scarred them greatly. On my grandmother's deathbed, she kept saying over and over again, she's kind of having the tremors that people have before they die, you know, they don't have any debt. They don't have any debt. They don't have any debt. You know, because she remembers just how painful it was to make it through those years.
Yeah.
So, sorry for using.
That's moving stuff. I mean, that was, the Fed's hurt a lot of people, Chris, and the system has hurt a lot of people. It's not a fair system. That's what the book tries to point out. And I wrote the book to try to help as many people as possible and to try and educate people, because this is a great country, and it was a great country, still is a great country, although we've gone in the wrong direction post World War II, and we can fix it. It's not beyond repair. But we can't fix it if we're not smart about it. and all the noise out there that tries to tell you that it's blue team or red team, there's a lot of noise. It's not really addressing the core issue. And the core issue is the money's broken. And so if we address the core issue, a lot of other things will fall back into place. And so I think that's why you did your documentary. That's why I wrote my book. I mean, we're like brothers separated at birth from different mothers. We both are fighting this battle. And, I think the good news is I think we will win, because I think that what will happen is, as this becomes more evident to more people, and as the monetary system fails, and I do think it will fail, people are going to wake up and they're going to realize what did it and what caused it. And they're going to demand sound money. They're just going to demand it. That's that, and that'll be it. And so we will return to a sound money standard. It'll be a first turning. The hero generation will emerge, and my kids and grandkids will have much better times than we're in right now. But right now, the average family is barely, is having. Unless you're really upper income, you're having a hard time making it in America, and kids are having a hard time having kids and buying houses. And I know all this because I have kids in the 20s and ones in their 30s, and it's tough out there. And the reason it's tough out there is that the money's broken. That's my view.
Absolutely. I saw a chart, that said in 1970, maybe it was 1960, the percentage of 30-year-olds with homes, married, and children was 53%. Right. And today, in 2026, it is 13%.
Is that right?
Yeah.
Wow. That's a shocking difference, right?
It's a huge difference, right? The millennial generation, speaking to my own generation, we walked into the world, into the financial collapse.
Yeah, right.
With all-time highs in college degrees, with all-time debt in college debt.
Sure.
And most of those people, the economy is just eroded. And now you have downward pressure from automation, AI, lots of other things. I think Gen Z has it maybe even slightly worse. So it's, I don't want to blame, I'm not blaming any generation for those things, but I'm definitely looking at
my generation effed it up. There's just no doubt. We were a greedy generation. We effed it up. Not all of us. Some of us knew it wasn't right and knew it was broken. But, it was, the incentives were, that when we went off the gold standard, a certain amount of restraint got removed.
Right.
And the book, I think the book does a decent job of showing layer by layer. It was just, we did this little step. Let's get rid of, let's get rid of this law. Okay, let's get rid of that law. Let's get,
Here's a little clip, Lawrence, of you talking about this is in vertical format, so it's like a little bit more abbreviated, but it's only 1 minute. This is you talking about the greatest sin in monetary policy in the 20th century.
How did this dramatic income inequality happen on such a wide scale?
We had 20,000 tons of gold coming out of World War II. And by the time we got down into the 8,000 range, Nixon and all the other monetary people within the government realized, oh my God, if we don't shut the gold window, we're going to lose all our gold. And we know that that's really money. And so in 71, Nixon created what I think is the greatest monetary crime of the entire United States history. We broke the link to the gold standard. And that's when inflation really got going.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
They started bailing out companies, then they started bailing out banks, then they started fiddling with the interest rate whenever things didn't go right.
The way you're going to get those interest rates down is by persisting in policies that will indeed continue to bring the inflation rate down.
So obviously,
Go ahead.
no, it's just obviously that's a key pivot, right?
Yeah.
Not only the creation of the Federal Reserve, but then eventually, because of Vietnam and social spending and the pressures, we had already stolen the right for the American citizen to own gold. Forget about that. That was done in 33. But then in 71, we're like, oh, you know what? International entities, forget about trading your U.S. treasuries for gold. Let's go ahead and take the gold standard away, which then, if you look at any inflation chart, CPI, which lies, but anyways, or CPM or whatever.
The line goes straight up after that date.
Yeah, it goes crazy. And I did a little in the documentary. I do a little sequence when the big bailouts start, because we bailed out we took Amtrak and turned it into a thing. We bailed out Lockheed Martin. We bailed out a couple of banks, and then it just gets totally wild in the 80s.
Yeah, Continental, Illinois. I used to work there. Yeah, and then they got rid of Glass-Steagall, which allowed Wall Street to just absolutely go wild, which is what then led to the GFC.
Yeah,
it's just it's Rosanna Dan. It's just one damn thing after another.
I know. So I asked Ron Paul this question. I said, Ron, what is going to actually, how are we going to end this Federal Reserve System? And he said, Chris, it's going to end itself because they're going to print it into oblivion. And I believe that, because if you look at the one thing I try to do in the documentary is same as your book, is I look at the 4 major wars that anybody alive right now maybe has memory of. I look at World War II, Vietnam, the war on terror, and I look at these areas into the modern world, which is more like financing of war, less so of us like having feet on the ground, but we're still paying the money to Ukraine and now Iran or whatever. The point is that in all of these episodes, it follows by a huge inflationary type of event, and so here we go again. It keeps on going. And when I asked you, hey, how much money do you think they're going to print? This is where my bullish side went. Okay, this is why you got to hold assets, because if they're going to print, if we're at 38 trillion right now, and you were like, they're going to go 60, 65, 70 trillion in the next 5 years. I was like, aha, that is going to push those assets up to insane levels.
Yeah, no, it really is. And you're right. I mean, it's just, they just keep, Ron's right too. I mean, the system will eliminate itself, and we're at the stage where it's getting exponential and the lines are going up too quickly. The next print will be bigger than the last one. The last one was 5.5 trillion roughly. This one will be larger than that. And the joke is kind of up. I mean, people are kind of catching on to the fact that you just can't trust your currency. And so they're opting out, and they're buying gold, they're buying Bitcoin, they're buying silver. That's really Gresham's law. When everybody knows the currency is doomed, nobody will hold the currency. And that means that as a practical matter, it'll continue to depreciate in value, and prices will keep going up until the point at which they're worthless. And that's, if you read the history of the Weimar Republic in the 1920s from 21 to 23, they were changing the prices on things on a daily basis, and everyone knew, and they were printing money to keep the system going, and everyone knew it was about to fail. And the only people who survived were the people who got out and either held pounds or dollars or gold, because if you held German marks, they became worthless. They were sweeping them in the streets and using them to build fires. So I think it's other places too. I mean, it happened in Venezuela, it's happened in Zimbabwe.
Absolutely. And it's important to note that Paul M. Warburg was one of the main architects of the Federal Reserve, and he had served on the Warburg Bank in Germany, which led to the Weimar Republic. It's the same system.
He knew that. They all knew it, but they also knew that in the beginning, it works quite well for a long, long time. You can fool people for quite some time, but we're at the stage now where the numbers are too big, and I think we're kind of beyond the point of continuing to fool people forever. And so, my belief is that all of this we're in a fourth turning, and my belief is it'll all kind of come to a head sometime in the early 2030s. I think we got maybe 1 or 2 more print cycles in us, and then it's just like nobody wants these dollars anymore. And okay, what are you're gonna pay me in sats? You're gonna pay me in gold? Maybe some other currency will emerge, whatever it'll be. But the dollar as a currency will effectively be dead.
Absolutely.
I think that will happen.
And that is the thesis of the book. And it's also the thesis of the documentary, that we are in the Great Reset. There might be different visions on how, nobody really knows, right, how that reset will happen. But I try to present a few different theses on what we will do, depending on how we will move back to sound money. But the takeaway from anybody watching is, you know, you got to hold sound assets in your possession, you know, gold, Bitcoin, something solid.
Yeah, houses work too, because you can't print them. I mean, I always say to anybody who's looking to invest, and you know, houses have the problem of property tax, and you can't move it very easily, et cetera, et cetera. But you know, it depreciates. But you know, I just say, if you're saving money, which everyone should try to do, you've got to save in things the government can't print, because the government is just, they've proven their irresponsibility in an increasing measure over time. And sadly, it's only going to get worse, because that's the history of how these things develop. And you know, we've got 100 hyperinflations in the last 300 years to study, and I have studied them, and they all look, you know, they all have conditions very similar to the condition we're in right now. You know, right before the currency fails. I mean, you get a big wave of inflation. Okay, they tighten it up. They brought it back down from 9 to 3. The next wave will take us to 15. They'll try to tighten that up. The next wave will take us to 25, and then the currency will fail. Everyone just, I get it. You know, this is the money is no good anymore. Boy, thank God I bought that gold, or thank God I bought that Bitcoin, or thank God I own a house, because at least those things have value in the new currency.
Absolutely, yeah. Well, one final thank you, Lawrence, because I know you have a hard cutoff here, but I want to thank you again for appearing in the documentary, but also for your connections. It's because of Lawrence. He reached out to Ron Paul's team that we were able to interview with Ron Paul, a legend in the and the Fed universe. You know,
he is absolutely the best, and he's my hero. Yeah, I love Ron Paul. So
yeah, he was.
Thank you, Chris. Thank you for all the work you do. Thank you for the documentary and all the efforts you put in on behalf of sound money. There aren't many people who get it, and I'm a huge fan of everybody who's trying to educate people, because it's what we've got to do if we want to solve the problem.
Absolutely. For those that haven't watched the documentary yet, you can see that from our website, fruitionproductions.com. And if you use the promo code and the Fed, don't say it too loud, they'll ban us. You can get 25% off the cost of the film, and we will later be rolling out to Amazon in the coming months. So thanks so much.
Yeah, Chris, how long is the documentary? I haven't had a chance to watch it yet. I will, but I haven't.
2 hours and 3 minutes.
2 hours and 3 minutes. Okay.
250 years of American history in 2 hours and 3 minutes.
I'm looking forward to it.
Yeah.
Okay. Thanks so much. Good to see you.
Thank you so much. All right, I'm going to end the stream now. Thanks, everybody, for watching.